The most analogous experience we've had working with a big public company is our experience working with McDonald's. And initially, McDonald's was resistant to our idea. Our idea was for McDonald's to basically get out of the business of operating restaurants and focus on their core business of what we called brand royalty, that is collecting rent and franchise fees from their franchisees, which is a much more stable, predictable, kind of better business. And we felt that if they did that, it would be a low-risk company. They could pay a higher dividend. It would trade at a higher multiple because those earnings are higher quality. That's how we looked at Target. We said, if you exit the credit card risk and funding risk, what will be left will be a higher quality, lower risk business that can, with greater free cash flow. McDonald's initially resisted what we had to say. We went public with a presentation. They hired Goldman Sachs. They hired Wachtell Lipton. I think they even hired Joel Frank. It was the same cast of characters. And they're smart, capable people. They put out a press release saying that our idea was wrong. But then they started their work. And they said, maybe there's something here. And they started getting phone calls from shareholders saying, what's wrong with this Pershing plan? And they started looking at it and studying it. And McDonald's came up with their own version of what we had proposed. Again, we have the benefit only of outside. We've never been an insider at Target, nor have we been an insider at McDonald's. But McDonald's was smart enough to instruct their advisors to, hey, there's something here. Take another look. And they came up with a solution that was a huge win for shareholders. Instead of spinning off a restaurant company, which was our initial plan, we're selling off a 19.9% interest in spinning off the rest to their shareholders. McDonald's decided to just generally begin a large refranchising program, which has had enormous benefits for the company as they've sold restaurants to franchisees who can operate them more efficiently, which has led to higher same-store sales. They've extracted capital from a low return on capital business, and they've improved the mix of their remaining franchise. Matt Paul, who was the CFO of McDonald's at the time that we were interacting with McDonald's, was really the architect of the ultimate solution, and he was the person who really pushed Goldman Sachs to work really with us as opposed to against us to come up with a solution that would help shareholders. During the period of time that we were an investor in McDonald's, the stock went from mid-20s per share to high 50s per share. The company's credit metrics have improved. Their dividend has increased. The stock has doubled. And Matt retired on the gains he made on his stock options. He's now a professor at the University of San Diego. So there's hope for Doug Scovanner. But after that, I said, I called up Matt and I said, would you join Pershing Square's advisory board? And he did. And in the last 9 months, Matt has been actually part of the meetings that we've had with Target. And my hope was having the former CFO of McDonald's, an extremely high caliber, very well-regarded guy who had actually hired the same advisors, might help us get to where we wanted to be. And I did initially propose him as another nominee to the board because I thought he could help the company get to the same kind of answers that McDonald's did in working with us. They turned him down because of the Best Buy, and that's when we went down the road of other independent directors. But I think that's a pretty full description of the nature of our interactions. But what I will say is we've had a great relationship with management. It's never been hostile. Even when I suggested, asked for another independent director for us, it was very pleasant. I had a very cordial meeting with the nominating committee. Where things broke down, in my opinion, is at the board level. It was the board that rejected me. It was the board that rejected Matt Paul. It was the board that rejected Richard Vague. And again, rejected Richard Vague without meeting him. Right? The board has spent less time with Richard Vague and Michael Ashner than you have. And to me, that is a loss for Target. That's why we reached into our pockets to run this proxy contest. And it shouldn't have to be this way. And it's unfortunate. And I think, I get calls from retail investors who tell me they're voting for us because this is very un-Target-like, and they don't want Target to become like Walmart. I mean, literally, a woman, Sarah Berg, I think her name is, with 30 shares. I feel like Bill Clinton calling someone out. But, she, among others, has said, you know what, I'm voting my 30 shares, and I'm going to show up at the meeting with a sign, because I think this is really important for the company. And I don't like the way they treat you. I don't like the letters that they've written. And I don't either, frankly. And, my expectation is these letters are not written by Greg Steinhoffel and Doug Scovanner. They're written by a PR firm. These are fight letters written by proxy advisory firms and lawyers and bankers who are designed to protect a company, from the evil outsider. But we're not the evil outsider. We're just a significant shareholder that's had a constructive relationship with Target that's put forth some independent directors. So that's my vent for the day. Another question from the audience, or should I take another one from, online. In early March, I purchased April 30 calls, which I've since exercised. I now own the underlying shares. What is the cutoff date to vote those shares? Have I missed it? Okay. The answer is, I don't remember does anyone know, any Pershing people know what the date is for that? Well, please call DF King. They will give you an answer. As a shareholder, what can I do to help you succeed with your plan? You can do a couple things. One is obviously you can vote the gold card and vote for members of our slate. Number two, if you are a client of the proxy advisory firms, the Riskmetrics of the world, Riskmetrics in particular always looks for feedback from their clients on what their view is of different slates, and we encourage you to bring that feedback to them. Also, public support is very helpful. A lot of people, particularly institutions, don't want to come out and support the dissident publicly. We've had a lot of very positive meetings with major shareholders of the company, but they want to keep a relationship with the company, and therefore I think we'll only ultimately hear about their vote when it gets down to the wire at the meeting. But public support is obviously very, very helpful. I'll take another one online unless there's one in the audience. Question in the audience? Okay. How do you respond to the comment that Pershing Square is motivated to pursue a risky short-term agenda due to its derivatives that expire in less than 2 years? I point out two things. One, in the Pershing main fund, we own 24.8 million shares outright, no leverage. Actually, can you please go back to the question? I want to see the whole question. That stock is effectively, there's no clock associated with common stock. Number two, Pershing Square 4, which is the entity that owns call options on Target, these options are struck at $35 a share. So at this point, they're $8 in the money. Number two, the options we own are not traditional listed options. We can extend them if we need to, but I think it's more likely that we end up rolling into the common stock and exercising those options at some point down the road. And number three, I would say management actually owns a lot of stock options that expire before the ones we own. And I don't think that's going to motivate them to do something risky in the short term. I think one's willingness to take on risk is a function of how much they can lose and how much they can make. And if we were to somehow cause, again, if I'm elected, it's only Bill Ackman on the slate. And even if this whole slate is elected and the other directors, they can stop anything proposed by any of the people on this slate. So there's no way that we can actually force something risky to happen. But, it's kind of a silly notion. But, our motivation here, we have a huge investment. I've got a huge personal investment. We've never, if you look at our track record as an investor, we've never caused a company to do risky things to hurt itself. We're going to be a big, illiquid holder of this company for a long period of time, and we want good things for the company. Any other questions for our group here, or is it time for lunch? One more here. You've been kind to management. I'll let you go in 1 second. I've criticized Target's board for, among other things, failing to assess strategic transactions. Isn't it management's job to pound the table when they think there's a good deal in front of the company? Why isn't this a management issue? Maybe I'll speak to this briefly, and then I'll ask others if they'd like to. I do think it's management's job to pound the table, but ultimately the board, we don't really know what took place. Was it that management insisted on retaining control of underwriting in the credit card business over the objection of the board? That could be. It could be otherwise. Why was this real estate transaction? Was there someone on the board who felt strongly against it and management was excited? We don't really know the answer. We think what I really asked for when I asked for one seat for Pershing Square on the Target board was to be part of the discussion. I just want to be in the room. I want to hear how this is being bandied about. I felt that with one seat on the board and one independent director, we could get to the right answer. What motivated me to run a proxy contest was how the board handled